name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets. I'll start with the euro against the dollar. An immediate countering bearish harami yesterday after the previous session's reactionary key reversal up and bullish engulfing pattern. The market is still nervous though, as it sits so close to a number of key supports. These are the upper trend line currently at 116.91 of the recent descending wedge pattern, the neckline currently 116.95 of the August to September 2020 head and shoulders top, the lesser 38.2% Fibonacci line of the March 2020 to January 2021 move at 16.94, and finally the famous low of late March this year at 17.02. Meanwhile, topside we have the previous support, that's now resistance, of the 50% Fibonacci line, the June 2020 to January 2021 move at 117.58. So far today, pull back up after yesterday's bearish action, with the market seemingly starting to get ready to extend yesterday's range topside up to that 117.58 resistance. Cable, aka sterling against US dollar. A reactionary bearish black Maribozo yesterday after the previous session's combined key reversal up and bullish engulfing pattern. This was a test down towards the key support below of the slowly moving lower long moving average below, currently at 137.82. In its examination of this support, I would give it, I suppose, a C-. Why? Well, we never actually tested it, but the effort was good and the close of the day was near enough to raise some small further questions about the support. Below this long moving average, you next have some support in the 137.5 area, then little underneath until the 136.5 area. As I said yesterday, I suspect that this pair may have more room on the downside. Meanwhile above, we have the declining short moving average, currently at 139.05, and the flatlining medium moving average. That's currently at 139.26. That actually was the short medium moving average at 139.05. These are actually now separating away, and as a consequence their combined power, which was greater, is now diminishing. So far today, well, not that much, but it still seems to be some more concentrated residual pressure from yesterday on the downside. Euro sterling. After most of this week saw indecisive, if lower, patterns here, yesterday was the exception, if loaded with its own question marks. We had a key reversal up and bullish engulfing pattern, but both were just so, only just. Hence the question marks at the end. The market drove up and closed over the April low at 84.70, yet it was also still within the key bearish driving force of this market, the May to date based bear channel, currently 84.47 up to 85.35. Below this, the next support of note is down at 83.35, and the resistance above is the slowly declining short medium moving average, currently at 85.59. So far today, a follow on higher, but a conservative move higher, still within the bear channel at the moment. US dollar against the Indian rupee. Gapping lower since filled in bullish opening white Maribozo yesterday. This gapping lower was the final manifestation of the recent 3-day bearish evening star pattern. However, two things. The market firstly, the market seemed unsure about staying that far below the significant 50% Fibonacci line of the February to April 2020 move at 74.26. Secondly, the market was not happy about testing the now rapidly rising short medium moving average below, currently 74.09, hence the reaction back upwards. I've still left on the daily chart the initial target X for the ascending broadening wedge pattern, that's in the 74.05 area, even though it was achieved late last week. We also still have a further secondary target X1 in the 73.80 area. That's untouched as yet, although I have doubts about whether we'll reach it as part of this cycle. Now, so far today, a lower open but well within the main body of yesterday's action, then a quick try higher and back down again. The open and the current market are both, well, just about below the important 50% Fibonacci line. That's something worth noting about. US dollar against the Brazilian real. Second bullish white soldier yesterday and a follow on to the previous session's immediate countering bullish harami. However, the move up was limited as the whole day's range stayed within support and resistance bands, notably on the top side where we have the two lesser Fibonacci levels at 525.65 and 526.79 and the declining medium moving average, currently 526.64. Meanwhile, below the lesser Fibonacci lines at 520.27, which had recently reacted as if nothing was there, well, they chose yesterday to start acting as if support. It's funny that. Anyway, this all still leaves open the one question I've been pondering now for weeks. Is the move up since late June purely reactionary, or is it the beginning of something else? See, there are arguments for the late June to date action becoming a possible triple top, or conversely a bullish halfway hesitation, and this situation still hasn't been settled. This all is in the shadow of the remarkable number of dead crosses we've seen here since late May. US dollar against the Mexican peso. A reactionary bullish harami yesterday, if only just. I suppose I should call it counter-reactionary, as the previous session's bearish black crow was a reactionary move to the previous few days' move higher. Anyway, it was a somewhat surprising move up and away from the comfort, or whatever you want to call it, of the attractor to the market now since April, the influential gently declining neckline of the February to March head and shoulders top, currently at 1980.11. I guess after all it still acts as support at a pinch because of this. Overhead, well, we still have all the moving averages pressing down upon prices and narrowing the range between the neckline and the moving averages. Overall, we can easily see the recent actions as part of the extensive indecision we'd seen originally since mid-April, which recently started again in late June. Now, one final point. Below, we still have the April to May base congestion zone between 1985 and 1995, on the fringes of which we saw yesterday finish up. Further down, we have a small support band at 1971.68. Now, so far today, a higher open and a move up to touch the short medium moving average, currently at 1998.08, before dropping away and already setting up to possibly be a bearish engulfing pattern today. Maybe more. Seems the attraction of the neckline is still there. Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final bit.